right? Now we will start with interest part. Mainly, I think we will be able to cover only interest today. And dividend will be in the next session, most probably. So if we talk about interest can be tax exempt or taxable interest. Okay. Now, most of all of the state bonds, if you have invested in state bonds, the interest on those bonds are mainly tax exempted, state or local bonds. But federal level bonds and interests are taxable. Okay. Now, one more thing that you need to keep in mind that is not related to federal, but it is related to state, is that let's say if you have invested in Delaware bonds, okay, and you have received the interest income of maybe $2,000. So this $2,000 will be exempted from taxes in Delaware and in federal, in IRS, like this Form 1040. But let's say you are liable to pay taxes in some other state also, maybe California. Let's say you are staying in California, so worldwide income will be taxed in California. Okay, since it is a Delaware bond, so in California it will be taxable. Only in Delaware and federal or IRS it will be non-taxable. So any state in which you may have to report the worldwide income, in that state, if the state bond or state interest related investment is not from that particular state, then it is taxable for that respective state.
Sir, you told that it is taxable in federal, but here the same example you are telling that Delaware and federal both it is exempted.
No, for Delaware it will be exempted. For California it will not be exempted.
For federal, sir?
For federal it will be exempted.
Because before you are informed that wherever you invest in state, only state bonds will be exempted, but it will be taxable for federal bond.
So this is a state bond. So there can be a state bond or there can be federal bond.
Okay. Oh, bond is still federal bond. Okay.
Yes.
Okay. Then we want to file return for both federal separately and for state separately.
Yes.
Every time, every person will want to file 2 returns at a time, at a year.
Correct. And that is filed automatically by the software only. So state.
Oh, both together when you file in the automatic.
From that particular software only. So you don't have to repeat the information for the state. So wherever federal related information is required in the state, it will automatically duplicate it. Okay.
Sir, what about local bond interest? That is also taxable in California?
Yes. So if it is not from the California, then it will be taxed.
Okay. Other state municipal bonds?
Yes. Other state municipal bonds and state bonds will be taxable in the resident state. Okay. So this is one thing. Another thing is 2 forms you need to keep in mind. In fact, 3 forms, 3 and more mainly. So first form is Form 1099 INT. So this is equivalent to Form 16A in India. That means it is a TDS or a tax withholding statement given by the payer of the interest. Okay. So this document you will receive from your client. Using this document, you have to report it in Schedule B of Form 1040 if the total interest amount is more than $1,500. If it is less than $1,500, then you can straight away report it here directly. No Schedule B is required. Schedule B is required only if taxable interest plus dividends, ordinary dividends, are more than $1,500. Then Schedule B is required. Okay.